Hello and welcome. Today we'll be talking to Timo Nicholaou, President of Consolidated Financial Management and Tax Services, about small businesses and self-employment. Thanks, Timo, for being here.
Thank you.
So due to the fact that many people were displaced by the recession, a lot of them became entrepreneurs. And we know that there are many corporate structures, but what would be the best for someone who's self-employed?
That's a good question. Kayla, is our great state and economy has gone through a very difficult thing. But one thing about Michigan and Metro Detroit people is their resilience. And many people have become, there's a great term you used was entrepreneurs, and started their own business or out of a fluke maybe have become in a position where they're getting income. And it's only appropriate that they report this income and structure it appropriately. And there are many different situations on how to set up a company. But many people are in a situation where they're making money and need to claim it. And the terrible situation of it, they're getting this money and there's no withholding on it for taxes for federal or state or their FICA for Social Security and everything. So yes, they should make sure that they're set up appropriately. And there's a few different structures. One of the most common ones are an LLC, a limited liability corporation. There's a LLP, which is a limited liability partnership when there's more than one person involved. There's a C Corp, which is the big major corporations. There's an S Corp for a little bit smaller sized business and how to funnel money. And then there's what's called a Schedule C. It really depends on the business structure, the amount of money that's being made, what kind of liabilities are there. You don't have to be a big business to be structured appropriately. Again, what you want to make sure is the structure is appropriate, that you're able, one, to claim the income appropriately, and two, most importantly, to take the tax deductions that you're entitled to, and three, to reduce your tax liability.
But are one of these options better for those who are self-employed?
Yes, I would say for, as we mentioned before, the entrepreneur type person, not that he's even small, he could have $1 million of revenue, but depending on how he's setting up, the number of employees and so on and so forth, I would say that the Schedule C could be more appropriate for him. And the reason why it's a Schedule C is, being the most common, it allows an individual to have their personal return and their business return combined as one. In addition, it's very easy how to record your income. And most importantly, as you can see, I'm emphasizing the deductions, is to take the deductions that they're entitled to. And many of these deductions that I'm referring to are advertising, whether you're putting things in Valpak or your posters around town, whatever it might be. Your car and truck usage, automobile, whether you have the real receipts of how much you're using it, or do you take the mileage? And a professional can help you how to do that. Commissions paid. In many instances, you have other salespeople, and you pay them a commission. And one thing I want to point out that is, as a self-employed person or a business owner or whatever type of corporation you are, and you do pay someone in excess of $600, you have to issue them what is called a 1099. And that is basically the type of employee that or company that you have, is you've been receiving 1099s, or you're receiving income that is no withholding. Therefore, at the end of a year, a person you're providing a goods or service to is going to give you a 1099 that said they paid you $10,000. Well, that's claiming of income, just like if you're paying someone else. So you have to know to issue a 1099 to be able to deduct that expense for that person. There are things like depreciation of when you buy big equipment. There are schedules of how much you could deduct from that. Interest, you might have a loan out for your company to be able to deduct the interest. There's legal professional fees, whoever helped you set up the company to be able to deduct those fees. It could be someone you have a license or have to have a license, those are deductible. Office expenses, you have to buy supplies, you have to buy equipment, those kind of things are related to it. You might be renting. The rent is deductible off your income. Machinery, repairs and maintenance, taxes that you pay, or licensing that you have, travel expenses, there's utilities, there's wages, if you require uniforms.
This seems to be a great deal of deductions from your income. What are the prospects of being audited by taking these deductions?
Well, it's a good question, Kayla, and really there are even more deductions. What I'm doing is giving somewhat pretty much broad categories. And people shouldn't feel hesitant to take these, and the prospects of an audit are always there, and the burden of proof is always on the client. But those expenses are there for you to take, and many people are hesitant to take them because they feel that it might spark this audit. And that's where it really dovetails into for them to really work with a professional to make sure they're in the guidelines of what is acceptable and what is not acceptable.
What professions might benefit most by filing a Schedule C?
Well, the various. To a great deal, it's anyone that receives a 1099. People get these and when they come to our office aren't quite sure what to do with them because they've done some work for someone. They've started goods or services and they're getting paid by them. And as I mentioned before, they're not withholding on them. A Schedule C is going to allow someone to be able to put that on their return, claim it appropriately, have the deductions. And those types of professions that most benefit by are everybody that we use in everyday life. Let's look at a salon. There's someone that does facials. There's someone that does manicures. Those are all compensated in cash in many instances. There's the hairstylist, the masseuse. One area I want to talk a little bit more about is maybe the bar and food industry, where the wait staff and bartenders get tips. A lot of times this is cash, and there's a formula that the bar or restaurant uses. Is if you did so many in sales, here's how much we're going to claim, but the other amount they don't claim. Well, you got to be very careful. Sometimes people are always wanting to hide income, and there are many instances where if people claim the income, they might be eligible for other tax credits. For instance, they might have children, and there's child tax credits. You have to show income in order to get that credit. Where a lot of people think, I don't want to show any income, and they deviate all the way from the other end of the spectrum where they should be claiming the income. Other professions are someone that does woodworking, a psychiatrist, psychologist with a small practice, trades, plumbers, woodworkers, electricians. Those are a great deal of them that really benefit by Schedule C.
Some of the professions you mentioned could be considered hobbies. What separates a hobby from a profession like that?
It's a good question, Kayla, because the IRS does scrutinize that, and there are many people out there that quote, have a hobby, yet they make $10,000 a year on it, and it's not claimed. But there is specific criteria that the IRS does use. And a lot of it is how much time and energy is going into the business. Is there profitability, or are they just doing this hobby to take a loss? Are they instituting programs within that hobby that make things more productive, that they make more money at their hobby? And does it only make profits in some years and not other years? Because there's a criteria of did you make money in so many years and not so many years, or losses in so many years. So there's criteria that needs to be looked at before someone really states that it's a hobby or a small business.
So what are some major points that you'd like our viewers to take away from this segment?
Well, the most important thing is to make sure they are set up. I know I spoke a little bit more on Schedule Cs, and that seems to be the best route for many people, but still to make sure that their company is set up in the most appropriate manner, to make sure that they're claiming the income appropriately and what constitutes the income that they're getting. The other thing is to make sure that they take all their deductions that they're entitled to. As I mentioned before, people feel this, we always hear about these situations where people get audited and owe big money, and I feel there are more people out there that are not taking advantage of some of the things that are deductions because they're afraid rather than being more aggressive. And that's where it comes into making sure that they're with the proper professional to guide them to take the right deductions and claim their income appropriately.
Well, that's all the time we have for today. Thank you so much, Timo, for joining us.
Thank you very much. It's been my pleasure.
Timo Nicholaou is president of Consolidated Financial Management and Tax Service. He has been in business for 30 years, operating his practice in downtown Rochester. He is currently in the process of making his home in Lake Orion and will be opening a tax practice in downtown Lake Orion at 214 South Broadway this January 2014. For more tax tips, you can contact Consolidated Financial Management and Tax Services at 248-650-6900.